In today's podcast, we're diving into the state of small business lending, where banks are pulling back, how non-bank lenders are stepping in, and what it all means for borrowers who need capital. We'll talk about the shifting lender appetites, deal sizes creeping ever higher, and why the gap between what banks want and what small businesses need keeps growing. Let's get into it. Hi, everyone. Welcome to the ABF Journal podcast. Joining me again on the podcast today is Joseph Camberato. He is with National Business Capital. Thanks for being here today, Joe.
Yes, thank you for having me, Rita.
Yeah. So your company has deployed over $3 billion without taking on private equity. How has staying independent shaped what kind of lender you can be versus competitors who did lean on outside capital?
It's just given us the ability to really, focus on, I think delivering for our customers, which are, businesses and then also for our employees, and never really had a gun to my head for shareholders. So that's been nice.
Definitely. So as a marketplace sitting across dozens of lenders, what do you see in real time that a single bank or a single lender simply can't see?
Well, we get a really interesting seat, and view where we are. We see, over 1,000 loan applications a month. So that alone is a lot. And then we're submitting those. We look at them internally. We're funding companies directly. And then if it doesn't make sense for us, we have our whole lender network that we've built for the last 20 years. And we really get to see, just how things are shifting, where lenders are tightening, where they're opening up, and you can start to see, where things are getting tight in certain industries. And I think that's really makes us great at what we do. And it's really good for our customers because at any given moment, we know which lenders love, a certain type of deal or, a certain type of industry. And we also know which lenders are tightening up. So it really helps us, one, get to the right lender, usually out of the gate, and really pull the right approval together for the business owner.
That's great. So where have you watched banks retreat during the last 6 to 12 months? And which deal sizes, industries, or credit profiles are they saying no to that they wouldn't have said no to 2 years ago?
So I don't think it's any one industry. I think it's just across the board. And I don't, really remember being in a time like this where you have a lot of good and bad happening all at the same time. You have companies that are crushing it and you have companies that are getting crushed all at the same time, which is really interesting. At the same time, you have banks that are, lending and not lending at the same time within the same bank. So, it's not really a matter of, the industries. There's certain industries that there's so much AI stuff happening and software that I think they're, really, putting a magnifying glass on. But at the end of the day, banks are just, digging deeper into the financials. They're adding more covenants, which you really have to watch as a borrower. And more importantly, they're just continuing to want to do larger and larger deal sizes. It used to be $1 million deals, then it was 5 million, then it was 10 million. Really as we were heading like right before COVID, that deal size was going to like the $5 to $10 million range. Now it's like 25 million to even 50 million, depending on the bank, that they really want to focus on. They want to work with larger companies, or they want to lend to non-bank lenders and let them kind of deal with all the underwriting on the smaller deals. So the banks just continue to go to larger and larger companies, which makes, which leaves a real gap in the market for the smaller, smaller business to lower middle market business.
For sure. Yeah, we've seen so many changes since SVB and all of that a few years ago. So across your deal flow, is non-bank pricing compressing or is it still carrying a real premium over bank products right now?
Well, I think whether you get, you get a deal from a bank or a non-bank lender, we're still in a higher rate environment. But I think overall and over the years, the non-bank lending rates have really come down, and the spreads from certain bank deals and non-bank deals aren't really that far off. And I think depending on your opportunity, the profitability of that opportunity, the convenience and speed that's brought to the table, a lot of time for our clients, they're kind of happy to pay that difference because they can move and execute on their opportunity. And then, when you're looking at any deal, um, even sometimes when comparing to bank, you know, if you're just focused on rate, you know, that better rate's great, but how long is it going to take you to close and what's the opportunity cost? And, we have situations where we can close a deal in a week or two, where it could be months with another lender or a bank. And, if you start to look at things quarter by quarter, like if it's going to take you 90 days versus, days or weeks, what's that going to do to your profit margins, for the year? So yeah, maybe you saved on that rate, but if you had to delay your opportunity for 3 months or longer, um, those numbers can actually work against you.
That's so true. So, what's the fastest moving signal that you track? Something that tells you that lender appetite is shifting, maybe before it shows up in any official data or surveys?
I think I mean, you can see it in the approvals and, declines or requests for additional, information or overstepping, I think we're still in an environment where lenders are still optimistic but cautious. And they are, underwriting well, but they're still lending and they're not fearful in lending as long as they get comfortable around, the deal. There's still not a shortage of money out there. If you have a business, you have an opportunity, it makes sense. You're not, in a really bad situation. The money's out there, and you can access capital. You just have to go to the right places.
So, we talked about banks already, but when it comes to non bank lenders, are you seeing them tighten up in any particular sectors? Um, what are you seeing there?
It's a mixed bag there as well. You see some lenders that have tightened up because they made some poor decisions through COVID and thought things were going to kind of continue, and then the market shifted, tightened up, or there was drastic shifts in industries going a few years back that you start to see those challenges show up in certain lenders' portfolios, and at the same time, you have some lenders that are actively lending and aggressive and are kind of opening up their guidelines. So it really just comes down to the lender, and no lenders are alike, whether it's a bank or non-bank lender. They're all made up, differently. And there's so much going on in the media now with private credit, and there's no private credit lenders that are really alike. Like it all depends on what they've been lending to in the past and how disciplined they've been in their underwritings that are really making up what they're doing right now. If you haven't been disciplined and you've been too much of a cowboy, you're probably tight right now and having challenges in a number of ways. If you've remained diligent through the recent years, you're focused and still deploying capital today you know uh, pretty efficiently and effectively.
So, let's shift back to NBC. How do you actually decide which lender a deal goes to? Is there a meaningful differentiation across your lender panel, or is the market consolidating toward a handful of funders who set pricing benchmark for everybody?
Yeah, I mean, when you get to certain type of deals, especially when you get into like that, super A paper with a group of lenders, pricing is going to wind up, and terms will be very similar. But every lender has their little caveats for industries and certain things they look at to score a deal. So you have to really understand those because that could make a big difference of you getting, a really amazing deal to, okay or good deal. Um, so, I mean, we have a built out proprietary system. All that information goes into our system. And then we have a deal review process. And that's a combo of using our tech, which really helps speeds things up, but also with having a really great team here that, we have a whole program guide that has really just, you know, endless amounts of information of lender guidelines. And that information is constantly changing. It changes on a daily, weekly, basis. It feels like, as of recently. So we're constantly updating that information. And because we do so much volume here, and we see so many loan applications, we're submitting so many things. There's also a feel that you get, but also those responses are going into our system, and it helps us, pick and choose better and get businesses and applications to the right place. But it's not just one thing that we do that makes that work. It's a combination of great people, great technology, and also product guidelines that are being updated in our system consistently.
So, as always, there's a lot of consolidation going on with lenders, banks. We've been seeing it for a long time, and we're seeing it with non-bank lenders as well. Does that make your marketplace model more or less valuable to borrowers?
I think just with everything that's going on in the market, I think it just makes us more valuable. When I started the business back in 2007, a lot of lenders, and I started working with non-bank lenders back then. Non-bank lending has been a thing for a very long time. It's not that, private credit just became such a buzzword and so popular. And it feels like almost overnight that all of a sudden there's all this non-bank lending. It was always there for going back to probably the beginning of time. But um, when I started the company in 2007, most of the non-bank lenders didn't have a website. So it was very hard to find them. And you really had to have a good, advisor, or someone in your corner, an attorney, um, a debt advisor, accountant that was kind of in the non-bank lending world. Um, Fast forward today, there's so many different options out there that it just makes it very complicated to navigate through. If you start doing Google searches, there's no shortages of finding different lenders that do different things. But it's like, how do you go to the right one? And then, the other thing is it's applying for financing. It's, you know, um, you have to fill out an application, you have to get all your financial docs together, and you have to submit that into underwriting. And if you get an offer that you don't like, or it's declined, then you have to go to the next lender. We take all that out of all that aggravation out of the business owners, hands, and we basically do it for them. And we've created a simplified process where you can apply in one place. We'll review it internally. If it makes sense for us, we'll, put out an offer. If it doesn't, we'll go out to, multiple lenders, and that happens with the click of a button at this point. And then we bring those options back to the customer, and we help, talk through, explain, answer questions. When you're not just like applying and your info is not sent to all around the world. Like you apply with us, we have a conversation. We want to understand your business, your opportunity. That happens in a very, pretty quick phone call. And then from there, we'll say, based on what you're looking to accomplish, here's your options. Here's what it's going to look like. Here's kind of what the market's setting for rates and terms. And here's the documentation that we're going to need in order to get you an approval. And then we'll help package all that up, and we'll submit it to and present it really to underwriting. And then we'll work through the back and forth that can happen from there. Sometimes there's questions from underwriting. Sometimes you have to do a phone call. Sometimes there's additional info. We'll take all that. We'll get all that stuff handled. We'll get an approval, and then from there we can go over the approval. Sometimes we'll bring multiple approvals to the table, and we can talk about the pros and cons of each one. And that alone, I think there's a lot of value in that. We've been told that we should really charge for like those services. We don't charge any upfront fees or anything like that. We don't believe in it.
That's awesome. So if banks and non-banks keep moving in opposite directions through the rest of the year, what does that do to the capital stack for a typical small business over the next year?
Well, it all depends on the bank and lender that you're with, right? So it depends on the changes that they're making. We've had people come to us and say, "Hey, our bank, really doesn't want to be in this, industry, anymore," or they don't really know what's happening, but they're being politely asked to leave. So you really need, I think, as a borrower, especially if you're relying on your bank to fund your business, your working capital, your cash flow, you want to be proactive in your conversations with your financing partner, really, and make sure that if you got a review coming up, where you have to reapply or submit docs, You want to get ahead of that stuff, and you want to be at least 6 months out, if not a year out, and really having those conversations. Um, and you really want to look out in your business, like what is in your growth plan, and are you going to need capital for that? Get ahead of that. Get 6 months out on that, so you can start have the conversations today, so you know what's going on in the market today, and and you can plan accordingly, because sometimes things just take longer than you realize.
So, what's the one thing about how small business credit is actually getting deployed right now that most people outside of the industry get wrong?
Well, I think that there's just so much negative news in general lately. I mean, in private credit, but I just feel like everything. I mean, we've been in a very doom and gloom environment, and I really think that the reality is that there's a lot more good happening in the world. There's a lot more good happening, at least in our country, than people realize. And there's a lot of businesses that are very proactive. There's a lot of opportunity out there. There's a lot of acquisitions happening. And there's also this huge amount of business out there, baby boomer businesses that are going to change hands and are starting to change hands, that are kind of aging out, ready to retire. There's trillions of dollars of acquisition opportunities out there. So there's a lot of good happening. You just have to kind of get out of the news and into your business, and into what's working for you, and into your industry. And if you really get out there and focus, you can find that there's a lot of opportunity, and those entrepreneurs are coming to us, and we're financing like really great deals, and great acquisitions, great growth opportunities. But you just have a mixed bag right now, where you have a lot of good, and you have companies that are really doing well, and you have companies that are having challenges, that haven't figured it out since COVID. So really, depending on who you talk to, can really make a difference in how you view the world. You can talk to one person, and if they're going through, you know, they just kind of didn't, move quick enough. They didn't pay attention during COVID. They kind of were hesitant and waited. Their business might have fallen behind, and those might be negative conversations with that business owner. If you talk to another business owner that's been really proactive, has taken advantage of certain opportunities, they've probably have continued to grow their business through this weird environment. So depending on who you talk to right now, really makes a difference and matters, and you need to watch who you talk to.
That's good advice. Those are the questions I had for you. Any final thoughts?
Um, you know, I just like I can't stress how important it is that we are in this very unique, market, and to really stay focused. There's still access to capital out there. There is a lot of opportunity out there. And I think if you seek, and explore, you will find. So,
That's a great way to end this. Well, thank you, Joe, for being on the podcast. Appreciate you taking the time.
yes, my pleasure. Great to see you, Rita.
Great to see you too.